Derek, one of the latest digital crazes that's out there right now is something that's called Non-Fungible Tokens, or NFTs. So we're going to find out, what are they, and as investors, should we even care? Also, I want to get into what I call a seesaw market and how to navigate that successfully. Our plan has never changed from the beginning. And you and I had a long discussion, an impromptu discussion on Friday night about kind of what companies were doing after reporting earnings and what to take away from that. And I went to bed last night, or not that night, I went to bed Friday night after our conversation, feeling actually very good about things because I remembered kind of the core of my investing basics. So every time I maybe come to a position where I'm not sure what to do, I always think back to the basics, and that helps me out quite a bit. So we are going to get into that. If you like this episode, please share it with a friend. And Derek, let's get into it.
Sounds good.
So Derek, non-fungible tokens. First of all, let's start out with, what does fungible mean?
So first things first, I would probably recommend, I feel like this is kind of part 3 in the series of about crypto that we've been doing, where we did the Bitcoin podcast a while back. Then I did the Ethereum one. I feel like this one builds on that because a lot of the stuff about NFTs is based on these smart contracts that I talked about in that Ethereum podcast. So, but basically, I mean, to answer your question, fungible, actually, I'll get into an example. Let me kind of build it up for a second, what NFTs are. Sound good?
Sure, sounds good.
So yeah, so basically it's one of these smart contracts that's built on a blockchain, in particular the Ethereum network, that are immutable and distributed, meaning nobody can go back and change the contract once it's already been agreed upon, and no party has more influence on the contract than the other parties. So if you get into a smart contract with a powerful entity, just because they have more money and resources doesn't mean they have any more power in the contract than you do, which is, I mean, that's valuable.
Yeah, level playing field, right?
Yeah, right, yeah. But so NFTs are a similar asset in the way like high net worth individuals will invest in art, where investors will purchase art as an asset. And I tried to find like some cool stats on like billionaires that owned art. A cool one that I found was Jay-Z owns over $70 million worth of art, which is pretty cool.
That's a lot of art.
Yeah,
or
along with
not,
all of it.
Perhaps not. Actually,
Yeah,
we'll get into that because some of these, even these NFTs that are that have been sold, crazy prices.
And also, I mean, like one masterpiece could be worth $70 million. He might have one painting.
Exactly.
I don't know if he disclosed which painting he has and where in his house that he keeps the paintings. You know, he probably isn't too vocal about what he has. But anyways, I digress. But basically, the value of the art is derived from sort of like clout, from who the artist is, sort of the historical aspect of it, and scarcity. And there's that painting, the example that I wanted to give was like, there's that painting of the like perfectly straight line. Do you know which painting I'm referring to?
I'm not.
Okay.
I'm not familiar.
So I'm gonna test my Adobe Premiere skills in this, and I'm gonna put the painting somewhere in this video. So hopefully I can get that to work. But basically it's literally just a straight line, but it sold for like millions of dollars. And it's just because of like the artist who painted it. But if I painted the exact same painting, I couldn't get anybody to buy it. But it's all because of who painted it and the situation around which it was painted.
So an NFT is essentially, it represents it's a digital image essentially, right? That allows the holder to have ownership.
Right. Yeah, and NFTs are similar, but they don't exist in physical space. So NFTs are non-fungible tokens, like you said. But fungible means that you can swap units around, and it doesn't matter which one you have. So if one person puts a 20 on the table, another person puts 2 10s, and another person puts 4 5s, and then you swap them all around and then redistribute them. It doesn't really matter. Yeah, it doesn't really matter which hand you're dealt, because it's $20 is $20 US. But something that's non-fungible is it really matters which one you get. So like if one person had the real Mona Lisa and then 2 people had a replica of the Mona Lisa, you put them on the table, mixed them up and redistributed them, it really matters which one you got, because there's only one of those that actually has value. But Yeah, sorry, go ahead.
So the thing that makes the non-fungible tokens have value is their scarcity, right? Because most of them have either a limited run or there's only one of them in existence.
And then also the like similar to how art, there's sort of the clout, like who makes it. I don't know. Are you familiar with memes?
Yeah,
of
course.
Okay,
yeah.
But some early days of the internet, these memes that were big like years ago, they were like whoever created the meme like repackaged it and sold it as an NFT and made like millions of dollars. Like, it's not necessarily art, but or scarcity isn't the only place where it derives value from. It's also the clout and like the cultural context.
Mm-hmm. So it seems to be on the surface, it seems to be that this relates mostly to art. So essentially what it is, and the reason it's often brought up with cryptocurrency is, number one, they're often purchased with cryptocurrencies, but they are not currencies, but they kind of operate with the same software. Is that correct with that, or the same technology?
Right. A lot of they wouldn't be possible without these smart contracts that are written on certain blockchains through certain cryptocurrencies. But the main one is a lot of these exchanges are written on top of the Ethereum network, which is really complicated and I don't really understand. But yeah, on the blockchain with these smart contracts, you can turn files into a token, which represents you own the one that matters. Basically, back to our Mona Lisa example, it proves beyond a reasonable doubt that you own the original copy. And anybody can go look and verify that is in fact the real one.
Yeah. So when you look at something that is created digitally, it kind of is counter to what we would typically expect. If I have a digital copy of something, I could potentially make infinite copies of that, right? But with these contracts that are essentially embedded in it, it's verification that this is the original one. And because I have ownership, I also have the ability to sell that, correct?
Right, yeah. And then it's not just used for art. It's it can be used for GIFs and videos. And are you a boxing fan?
I wouldn't say I'm a boxing fan, but I follow the sport loosely.
Well, if you're familiar, do you know the YouTuber Jake Paul? Like, he has been doing these boxing matches.
I have not, no.
Okay. Well, he's a YouTuber that will box celebrities. Do you know who Nate Robinson is, the basketball player?
Oh yeah.
Okay. So Jake Paul boxed Nate Robinson, and they sold the knockout, the physical knockout, not the video of the knockout. They sold the knockout as an NFT.
Yeah.
Triller did, the people that put this fight on.
Yeah, you have moments in NBA. You have all sorts of sports moments built into that. There's even Charmin did an NFT for their toilet paper. Taco Bell did an NFT to raise money for charity. The thing that I find interesting about it, and this kind of is really the technology behind it, because I could see where this could go other places. So normally, we go back to the beginning of history, or the beginning of art. If I spend 6 months on a piece of artwork, a drawing, a painting, and I sell that to you, I have one opportunity to make money on that purchase, and it's the sale to you. And you could turn around and sell it to somebody else. But when you sell it to somebody else, I can't have any share of that wealth, right?
Right.
You can actually build it into the NFT that I get commissions. If I'm the creator of that artwork, I get commissions every time that piece of that NFT is sold.
Sort of like a royalty.
A royalty on that. So I thought,
right, yeah.
And maybe this is a bad example, but then I started thinking about, well, what are other products out there that people make and spend a long time on, and they get one chance to sell it? And what came to my mind right away is a house, right? I can build you a house and I can sell you that house, but then when you turn around and sell it to somebody else, I don't have any sharing of that. So I'm wondering is if these contracts are really the important thing that might extend into some other areas in the economy where things that normally would only have a one cycle to make money off of from the creator, potentially, as you had said, has royalties down the road.
Right. And I had mentioned in the Ethereum podcast I did that there's a lot of interest in these smart contracts with even people that are crypto skeptics that don't want anything to do with crypto. There's still practical uses for these smart contracts with insurance and other financial applications. And you had mentioned real estate. Like, I mean, any place that needs a contract, you can really use these. They're very applicable. You
know where I would like to see this go, and it probably would never happen anytime soon, but I would like to see this happen with something with voting. in the sense that
That was another example I'd given.
Right.
Clearly, you didn't listen to the podcast because I mentioned voting.
I was on the podcast. I do remember you saying that, but I would like it to go there. The thing that I see with the problem with our country is, and I've said this on a previous podcast, is if I look at, and you could go back to the election of, maybe I could go back farther, but think about Bush and Gore, that election, when there was these controversies on, what was these hanging chads and what was legit, what was not legit. When President Trump was elected, there was a great portion of the population that thought that Russia had intervened, right, and that the election was rigged. And then this election here, when President Joe Biden was elected, there was a great portion of the population that felt that the election was something fishy about it. So I think that is the actual danger to democracy, not whether a Republican or Democrat or Libertarian wins office. I think that if we no longer believe that these elections are legit, that is probably, in my mind, the biggest threat to our democracy.
Yeah, and then, it's not so much who wins, it's the peaceful transition of power that has been respected for hundreds of years.
For hundreds of years, yeah.
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 Yeah, I completely agree. And in a world of fake news where technology makes it actually harder, even in the information age, it makes it harder and harder to realize what's actually true. There's sort of increasing demand for objects that can be verified beyond a reasonable doubt.
Sure.
And I think that's part of the reason why, along with a hype culture and everybody's trying to make a quick buck right now, but these NFTs and Bitcoin and sort of away from established institutions that can kind of these people that have influence can kind of play puppet master and kind of pull the gears. But with these NFTs and cryptocurrency, it's beyond a reasonable doubt. You can prove it, it's verifiable. And I think there's a huge demand for that right now.
So why do you think, so NFTs have actually been around since I believe 2014, somewhere around there. Why are they now becoming the rage?
I mean, it's just because I think with the bull market, because I think it was $144 million were sold in NFTs from 2017. And go check your calendar. That's when the last Bitcoin bull market was. So I think it's just, they're probably highly correlated. That would be my guess.
To the cryptocurrencies, yeah.
Right, yeah.
So when I was looking online at these NFTs, because I had to brush my own knowledge up on them, it's funny because I first heard about them actually either the end of last year or the beginning of this year is the first time I heard about them. And you're right, it's because of the increase in the, the awareness and just the overall interest in cryptocurrencies. But I could be wrong. Maybe there's something different out there. But the most popular or maybe most expensive NFT ever purchased was by an artist named Mike Winkelmann. And he purchased,
Beeple.
or he what's that?
Is that Beeple? Beeple? Is that Beeple?
It's Beeple. And he created every days, the first 5,000 days, which was an image of 5,000 different collages or renderings that he had did, drawings that he had did. And it sold on Christie's for, I believe, something like $69.3 million.
Yeah, right. Yeah, that's crazy.
And I want you to use your Adobe skills, if you can, to bring that image up. Because
okay, sweet.
When I looked at that image, I mean, I am not an art connoisseur. And sometimes I can look at a painting and say, yeah, that's beautiful. Or I can look at something and say, man, that took a lot of work. But kind of like that straight line, I'm looking at that collage and I'm trying to find out where $69.3 million came from.
And it's crazy. Whether you paid $69 million for that or you just looked it up online, you can you kind of enjoy it the same way. You know what I'm saying?
You enjoy it the same way, but it's the what you find, I think, with the ownership of art is the bragging rights of the original piece.
100%.
Right? That's
100%.
what gives it the value.
Because I can Google a picture of the Mona Lisa too, and it would by no means have the same impact on me as if I actually was viewing it from my living room.
Right, if it's hanging on the wall behind you.
Yeah, right. Yeah, right here. I might get the Mona Lisa right here.
I've actually seen the Mona Lisa in person. I was fortunate enough to, my father-in-law worked overseas for a number of years, and my wife and I went there, and what shocked me was how small it was.
Yeah, that's what everybody says.
Right?
I've never seen it, but yeah, that's what everybody says.
Because you see a picture of it, and it takes up your whole screen, or wherever you're viewing it, and you can't, of course it's behind rope, so you can't actually walk up to it, right? You have to, you're already viewing it from a number of feet away, and then it's actually a pretty small painting.
My favorite painting is it's actually the skin for my PlayStation here. I'll pull. I'll try my Adobe Premiere skills, but it's the one with all the little dots. Do you know what I'm talking about?
No.
It was basically it's amazing. I'll send you a picture and I'll do the Adobe Premiere thing. but basically it was painted by not brushstrokes, but by individual dots. And this painting's like 6 feet, 10 feet long. And it's a massive painting. And it took like years to complete, but each, like if you look at it really closely, it's all individual dots.
That's amazing. It takes a lot. I think about when I paint the walls of my house, and about halfway through I get sloppy because I get bored and out of time and impatient. So Derek, NFTs. I'm looking at this, and they're very interesting. And what's interesting to me is the contracts behind them. As everyday investors, I don't know how much impact they have on anything that we do, other than the fact that I think we continually need to keep an eye on the technology of where that goes, because I think there's a lot of opportunities in that.
I agree completely. I don't own any NFTs, or I can't see a scenario where I would be like, oh, I got to spend $600,000 on a file, or it's I don't see myself doing that anytime soon, unless it was something that I really wanted. But yeah, like the applications of these smart contracts is I think there's so much untapped possibility. And it's one of the reasons I own Ethereum. You actually don't own Ethereum.
I don't. Every day Derek says,
have fun staying poor.
Have fun staying poor, yep. So I haven't owned it. Maybe one day I'll pull the trigger on it, but I haven't felt the urge. I've been buying Bitcoin like you've told me to, and I've been buying stablecoin along with.
That's like the adage in the crypto world. It's like I forget who it is, but like Warren Buffett, like they'll be like, have fun staying poor because he doesn't own Bitcoin. He's worth like $100 billion.
Yeah, he's worried about that.
Yeah, right. Actually, sorry, go ahead.
No, I actually have a great Warren Buffett quote coming here later in the podcast.
Oh, sweet. But one last thing on NFTs, unless you have anything to add. Mark Cuban's actually really bullish on NFTs, and he has been. He was actually, before the mainstream media was reporting on NFTs, I actually listened to a podcast with Mark Cuban, and he was raving, like going on and on and on about NFTs, and they didn't make any sense the first time I heard them. And then, I mean, they blew up. I don't know who bought that People file artwork, but who knows? Maybe it was Mark Cuban.
Yeah. I think it's definitely good news if you're an artist, right? If you have the ability to,
it's awesome.
To maintain ownership of that for a long time, and I think that's fantastic. You know, the thing about NFTs is I could spend $69.3 million on Beeple's NFT, but that doesn't necessarily mean that somebody else is willing to pay that. So it's like all art, right? I mean, the value of it is what somebody is willing to pay. And just because you buy
it, it's stocks too. It's true for stocks too.
It is true for stocks, but essentially, when you see that listed price on there, for the most part, that is the going rate of that stock, and it could be overvalued, it could be undervalued, but it's. I agree with you, but I think that stocks are maybe a little bit more liquid, a little bit easier to sell.
That's pretty much the only difference. It's like the liquidity. If people decide tomorrow, let's say Apple comes out tomorrow and says we were Bernie Madoffing everybody, like they were just a Ponzi scheme.
Yeah,
it's like
these phones actually don't exist.
Yeah. Nobody actually owns an iPhone. You guys are all scammed. They're all NFTs.
Yeah,
it's like I don't know where I was going with that example, but whatever.
Yeah, I want to shift gears a little bit because Friday night you and I were doing what a lot of people probably do on a Friday night, and that was at 11 o'clock at night.
Talking stocks.
We were talking about stocks and talking about, and the thing that had, I guess, had my mind spinning is that we actually had a fantastic earnings week. If I look at all the players that got us to where we are here in the market, they all had monster quarters. Apple had a near perfect quarter. Amazon had a great quarter. Microsoft had a great quarter. And what's interesting is all three of those finished the day down after they reported those fantastic earnings.
I think MasterCard was in there too.
MasterCard was in there too,
yeah.
Another amazing run here. So I began to think, sometimes you begin to think too much. And the question I was asking was, why is this happening? Is it because maybe the forecast that they were giving was maybe not as rosy as what it had been in the past? And that could be for some of it. I think that was the case, that some of the analysts didn't like some of the short-term views that maybe Microsoft had with growth. And I'm not concerned about the growth long-term of Microsoft, but sometimes the short-term price is related to short-term traders and what they expect to happen. And then I began thinking, well, maybe is it this massive run that we've had up from COVID to present? Is it maybe just too high of a bar to clear anymore? And these companies, even though they're just reporting monster earnings, the bar is just too high. And maybe the market's maybe ready to take a break. So if that was the case, and this is kind of what I call my seesaw market, and you actually brought the term to me in the sense that you kind of get the feeling that we could either continue to boom here, or maybe we could pull back a little bit and have the market take a breather. And so it's going to go one way or the other. It almost doesn't feel like it's somewhere in between. It's going to tip one way or the other, and who knows what it does. But then I started thinking about, well, how should we be positioning our investments if that's the case? And then racked my brain and I thought different theories. But what it gets to is this. Anytime that you think this way, and you're probably going to have many, many times where you wonder, people ask us all the time, what's the market going to do tomorrow? What's the market going to do next week? We don't know, right? And if you're asking that question, and if you are determining whether you should be in stocks based on the answer to that question, you know what that tells me, Derek, is we shouldn't be in the market. If we don't have a long enough term view as far as our investing, then we should not be in the market. We should be pulling money aside. So the money that you're going to be using to remodel your house in 6 months should not be in the market.
Right.
And then once I realized that, again, once I got back to the principles, I thought, okay, so here's the strategy. You stop worrying about the market and you just continue to buy fantastic companies. As we discussed, value versus growth. It doesn't matter if it's growth or value. I want to own these fantastic companies and I want to own them long term. So I'm going to continue to buy them. And if they dip, I'm going to continue to buy them.
So, so what kind of, actually first hit me with that Warren Buffett quote.
So let me look it up here. I wrote it down because it's a good one. Because sometimes do you feel like, well, maybe you don't. I sometimes feel like things come to you at certain times and maybe it's because you're looking for them. And that's why you spot them. When you, the old adage they say is you're shopping online and you're going to buy a red car and all you see on the streets are red cars, right? Or you're going to buy, you're a Bentley guy, aren't you? What's your car? Yeah. So
or McLarens. McLarens are dope.
McLarens. So, well, you probably don't see McLarens on the street all the time. Right? So.
I saw, oh my gosh, dude. We were in Easton today. I saw a Porsche Turbo S. Have you ever seen those?
That doesn't mean anything to me.
Oh, it's a nice car. And then we saw like the brand new Corvette, which looks really sweet. Yeah. I'm actually not a Corvette guy. I was talking to Lily about it. And I'm not a Corvette guy, but that new one is sharp. It's a really cool Corvette.
So what Warren Buffett...
right here, I'm going to put two pictures, a Porsche and a Corvette right here.
Yeah. And then
I'm going to show off.
And then put my Toyota Corolla right next to it.
There you go, yeah. I'm going to show off my Adobe Premiere skills.
So what Warren Buffett said is, all that is required is the passage of time, an inner calm, ample diversification, and minimalization of transactions. And that's essentially how he built.
Wasn't it transaction costs or
transaction fees? But that stems from transactions, right? He's not buying and selling, buying and selling. He's not in and out. He's in and out. He's in the market. Gotcha. And we did that podcast on time in the market, not timing the market. And I think that really holds true. So anytime that I need some clarity, it's things like that bring me back to what the basics are and what has made us successful as investors to this point. What has made us successful as investors to this point is going to be the same thing that makes us successful as investors a year from now, 5 years from now, 10 years from now, buying high quality companies and just owning them.
It was really interesting to me about, like, it kind of made sense to me why like Tesla got beat up and why Apple got beat up, because anything that has to deal with hardware right now, because of the chip shortage, like there's not much mercy in the market for you because everybody's terrified. It's really stricken. I mean, there's so many shortages and like the supply chain is so screwed up right now because of COVID. I get why those two kind of pulled back. But like, did Amazon finish the week up?
They finished the week up, but they ended the day down after reporting fantastic earnings.
So like Microsoft is mostly like software.
Right.
And like they got beat up. Yeah. And like Amazon, and then, but like Google, they had a great quarter and their share price skyrocketed. Like they had a great week. So
Google proves again though that they're a juggernaut, because one of the things that's benefiting Google is now we're getting ad revenue returning, right? Mm-hmm. Because companies are now coming out of this reopening here and they're now spending their money again on marketing and advertising. So Google saw the advantage of the return of ad revenue, but then the other thing that Google has going for it, this almost seems unfair, is YouTube. YouTube could be a standalone company by itself, and it would be an amazing company.
I mean, with all the antitrust stuff that Google gets dinged with, do you think that'll continue? Do you think they'll spin off?
Well, it's like, probably someday they will. But it's like you said, Google's product for the most part. Now you can have a paid subscription to YouTube. Like I can pay that,
and I would pay that. Like YouTube's the best.
Right.
I watch more YouTube, or I'm on YouTube more for podcasts and stuff than Netflix and Hulu combined, probably.
Well, just everything. I mean, I use it the same way. So if I need to fix something in my bathroom or something like that, I'm watching 3 or 4 YouTube videos, and actually who am I kidding? I watch one and then I dive into it. But I think possibly someday. But again, it's a product that for the most part is offered for free to you, other than you're paying for your internet, service or whatever. But you can go on and get the benefit of Google searches for absolutely free to you, most people.
Yeah, it's awesome.
By the way, if I sound extra smart in this podcast, and hopefully I do, the coffee that I have, it has lion's mane in it. Have you ever had any of that?
The mushroom coffee?
Yeah, it's not the actual lion's mane. It's not. Don't worry, if anybody for animals out there, I'm not actually drinking a lion's mane, but yeah, the mushroom out there. And I have no idea if it's making.
What's the brand of it?
Sigmatic, for Sigmatic, I believe.
Yeah,
I'm probably
that. Oh, wait, did you get that because of the sponsorship on the Lex Friedman podcast?
No, it was a free sample that came into the mail.
Oh, they're a sponsor of that show.
Are they? Yeah.
Yeah.
Good podcast.
Is lion's mane the one that makes you trip balls, or is?
No, it's supposed to have mental clarity,
Oh,
which I'm obviously experiencing right now.
Yeah.
So here's a caveat, though. So getting back to, we're investing in fantastic companies over the long run, and we're not worrying about where the market's at, right? Because if we're worrying about where the market's at, then that tells us our money shouldn't be in the market. So that brings everything very, very crystal clear right now. But I don't think there's anything wrong with finding themes. And what I mean by that is finding themes and then finding great companies within those themes. So with the benefit of hindsight, we could look back to March of 2020 when all hell was breaking loose. And we saw the companies that won 3 months later, 4 months later. They were the social distancing companies, right? So they were Zoom. They were Teladoc. They were Amazon because people were shopping online. They were Apple because people needed devices to shop online. They were all these things that allowed for social distancing to happen. And in December of 2020, you could have looked back and said, that makes sense, right? Being in companies that, whatever was taking place in the economy, it was in their favor. So as investors, how do we do the same for where we are right now? So a lot of people have coined the second half of 2021 the great reopening, right? And hopefully we'll have more travel. Hopefully we have restaurants that come open. So what are some things, and I wrote down 2 ideas here, but I wanted to see if I could pick your brains on it here. And I'll go first. So the obvious one to me is restaurants, right? Restaurants have been trying to stay alive through 2020 and the first half of 2021. But as I go out, I don't know if you've experienced this as well. I've traveled a little bit. I went to Florida. My wife and I went out last night. Restaurants are packed right now. The restaurants that we're in are packed right now.
I was gonna mention something. Yeah, it's crazy. It's unreal.
So is there an opportunity in something like a Darden Restaurants, DRI, ticker symbol DRI, which owns sit-down restaurants like Olive Garden, Longhorn Steakhouse, Cheddar's, among others? What do you think?
Olive Garden is crap.
Oh, I'm not judging them on the food, but there are people that go to it. Yeah, if you're obviously if you're an authentic Italian person, you're probably not going to go to Olive Garden, but other than the breadsticks,
right. I think it's an interesting play. Haven't they? So I mean, let's take a step back here. So during COVID, those companies, they kind of are big enough that they could benefit from the takeout orders, like the online ordering stuff. I wonder how much decreased demand? I know that there's such a great increase in demand right now because of the reopening stuff, but I think there is an opportunity there. But I wonder how much of that, I wonder if you could get more isolated in what you're trying to invest in there by investing in somebody that couldn't benefit from the online ordering. But those would probably just be
private companies,
like small restaurants. Yeah, go to your local restaurant and be like, hey. I want to invest in your business.
Well, when I was looking at Darden Restaurants briefly, the one thing that struck me about them is if we are having a reopening, is I believe right now they still have negative earnings per share. And as the quarters go by, it might be a lower bar to clear because they're comparing year over year to, let's face it, the worst of the worst.
Right.
And so might be an investment opportunity there. The other thing I thought about, go ahead, you were going to say something.
Oh, sorry. What does their 2020 look like? I haven't really followed that stock. Did they get beat up pretty bad?
They got beat up hard. Just like a lot of restaurants. I mean, a lot of
that could be an interesting pick then.
Yeah, I mean they're back. They're they've come back and they're at close to a high point. But I wonder if that high point is still going to go higher. I would be willing to bet that it's going to go higher because they're going to be comparing comparables from a year ago from previous quarters that were disasters.
Right. Yeah, makes sense.
The other thing I would think about is when you're working at home and you're on Zoom, and most people when they're on Zoom, they're not actually showing their picture, they're just sharing their monitor. The need for clothing is not that high, right? People aren't going to clubs.
Yeah, right.
People aren't getting dressed up for work because they're sitting in their boxer shorts and their pajamas while they're making deals. And so I wonder how many retailers like that could benefit from a reopening. And what I'm looking at is, and it doesn't have to be like a fancy wardrobe type thing. I'm looking at companies like Target or Nike or Levi Strauss or Lululemon.
Macy's could be a good one.
Yeah, I mean,
Macy's, yeah.
Macy's, yeah, they could be. I would. The thing that's worries me about Macy's is I don't think they have the online presence of like a Lululemon or a Nike or a Target, especially.
Sure. Yeah. No, I think you're right about that. I like Lululemon and Nike for retail plays. I think that's a good idea.
So, just something to think about. I think if we if it's December of 2021 and everything did go great, the grand reopening took place, and the economy is humming again, or at least getting back to humming again. One of the things that we might be able to do in a 2020 hindsight is say, oh, that makes sense. The economies are going to open up, so these things that were suffering prior should do well. And maybe we're not selling our tried and true companies, but if you're looking for new investment opportunities, maybe they get a share of that pie so that we can benefit from the growth.
I think, I don't know if you mentioned this on the podcast, but you had a thesis about Pepsi.
Mm-hmm.
And like ever since you told me that your theory on Pepsi, I've heard a lot of talking heads on CNBC and all these investment gurus.
Because they're listening in to this
Pepsi.
podcast.
Yeah, I know, right? Sure. Yeah, they're biting our ideas, man.
Right. Well, yeah.
It's a matter of time.
And the thesis behind Pepsi, which would be the same as Coke, is that if we look at the markup on soft drinks and these snacks, it's rather high. But where do they sell those? They tend to sell them at gatherings. They sell them at ball games and concerts and events. And when that wasn't happening through 2020, they suffered because of that. And even the travel, like when you go on a road trip with your friends, what do you have? You got some salty snacks, you got some chips with you got some Frito-Lays, and you got some Road Pops. Hopefully they're the legal kind.
Right. Yeah. I was going to say, oh yeah. And then you mentioned that your original theory was beer, like invest in like what's Anheuser-Busch or Constellation.
Sam Adams or
yeah. But then like you realize isn't the markup or the profit margins on soft drinks higher than beer? Is that
higher.
What you said?
Yeah, they're higher.
That's interesting. Yeah.
So I don't know. I think that those two companies have a lot going for it. And the thing about Pepsi and Coke is, if you're wrong, number one, Pepsi and Coke aren't going anywhere, right? I'm not worrying about them disappearing or even getting cut in half. The thing about that is if you're wrong, I think Coke's got roughly a 3% dividend and Pepsi's just a little bit less than that.
And you're buying them. I think you're buying them at a low point, right? Because they've gotten.
They have not really shot off like the rest of this. And that's kind of what we're looking for right now is companies that maybe still can offer value but haven't had this tremendous run of, the companies that we love that we're going to maintain because they're going to be winners for a long, long time. But like if I look at Mercado Libre, I love Mercado Libre as a company, but in 2020, they did roughly 200% return?
Yeah, probably not going to do that back to back.
They're not going to do that back to back. And something like a Pepsi or something like a Darden Restaurants or something like that, I'm not comparing that to Mercado Libre as far as long-term what they're going to be, but
it's an opportunity.
It's an opportunity, yeah, potentially.
So are you buying any NFTs?
No, I'm not. Only because the value is in the eye of the beholder, right? And I don't own a whole lot of art other than what my daughter draws me, and I put that in my office. To me, that's more valuable than the NFT. Hey, I do have a question for you.
Yeah, go
So
for it.
if I buy an NFT, where am I storing it? Am I storing it in a wallet?
In a digital wallet, yeah, correct.
Yeah.
Yeah.
So I just hold these. I hold a code that essentially represents that. Is that what that is?
Yeah. But I wish I'm gonna look into like getting an actual like private wallet. I'm gonna edit this part out of the podcast so when they make Bitcoin illegal, they can't come knocking on my door for my private wallet.
Well, I never purchased it.
Yeah, well, what they say in the crypto community is the hypothetical boat, or is it something about a boat? And then if somebody ever comes to your house, be like, "Oh, I lost it in a boating accident."
Yeah, it sank. Right?
Yeah.
That's
yeah.
funny.
But anyway, I'm gonna look into getting one of these because I think I have crypto in like 4 different places right now, and it's annoying.
You're the crypto kid for sure.
Not as much as some people, but yeah.
Well, Derek, before we go here, I want to congratulate you. You are not officially, but for the most part, you're graduated, right?
By the time this comes out, yeah, I'll be officially graduated.
You've got no more classes, though. No more tests, no more classes.
Oh, yeah. I've been like that for a while, though.
Yeah.
For like a couple weeks now.
So
we have our senior bar crawl on Tuesday. Well, okay, so it'd be I don't know when it's the 4th, actually. I do know the date. But it's supposed to rain all day.
Oh,
so
nice.
We're gonna, yeah. But all the graduating seniors at Ohio State do like a bar crawl. It's pretty cool.
Yeah. Well, good luck, and I hope you make it back safely.
Probably won't.
Yeah. I'm going to have a hard time finding a replacement.
Thanks, I appreciate it.
Well, Derek, anything else to add before we head out?
As always, thank you guys for listening to Dynamic Growth. If you like the podcast, subscribe on YouTube, or rate, review, and subscribe wherever you get your podcasts. Subscribe on YouTube, like the video, follow us on Instagram at Dynamic Growth Pod, and at Crosby Advisory Group, where we post clips from the episode. And we will see you guys next week.
Okay. Thank you, Derek. As always, remember that Crosby Advisory is a registered investment advisor in the state of Ohio. At any time, you can request our forms ADV 2A and 2B, which go into the business practices and qualifications of Crosby Advisory. Today on the show, we mentioned specific securities. That is not a recommendation for you to go out and buy them, sell them, trade them. Non-fungible, fungible, doesn't matter. Do your own homework. Keep in mind that investing involves risk, and you should carefully consider all risks and fees before making an investment. Crosby Advisory is also a licensed insurance advisor. Insurance products are sold and serviced through Crosby Advisory.
I'm thinking of like what I would buy as an NFT. Like
it's got to be Yeezy, right?
Yeah, but I would just buy the shoes because I love the shoes. But like if you could get, I don't know, like Jocko's video where he goes good.
Mm-hmm.
That one, I'd buy that NFT.
That's a good one, isn't it?